Hi guys, welcome back to Finpact. Now, I've covered Muln Automotive stock a lot recently, and I want to cover their reverse split and how this could be very likely to take place. Now, this is likely to not be good for investors because it's dilutive. I'll go into why a reverse stock split may not work for investors, but it could be okay in the future if Muln's stock price generates revenue and then the price of the shares will go up later. Now, Muln has promised to bring in revenues as early as Q1 2023. They want to start delivering the first of their Class 1 vehicles in the first quarter of this coming year. Now, the issue is investors are expected to vote on a number of issues. The first is a reverse stock split, and the second is an authorization to increase the share count. Now, the reason the reverse stock split has been proposed is because of the share's low price. It's been trading around 19 cents recently, and this of course is less than $1, which is Nasdaq's threshold. And unfortunately, Muln has missed one of their deadlines to increase their share price. Of course, the current market circumstances with the very difficult macroeconomic situation that's taking place globally has not helped its case. And on top of that, penny stocks are highly volatile and they tend to be the first to tank when there is a market downturn. The second move that the shareholders have to vote on is the increase of the share count. Now, this will have to be authorized through the vote. The reason they have done this is so that Muln Automotive has a good path to liquidity and that they do not rely on the debt markets. Now, it may be a smart move for management because that means they will have more capital to fund operations, but it is a dilutive move for investors. So it seems like the CEO is in favor of the stock, and people are basing this on his purchase of a single share of a Class AA stock. It seems that he is in favor of the reverse split, which isn't ideal for investors, but it can be good for the long term if management is able to gather enough liquidity to fund operations and basically achieve the goals of executing top-notch electric vehicles as Muln wants to do so that they can be profitable in the future. And then of course, if that happens, naturally investors will be rewarded with higher share prices in the future. But it is at a very early stage. This company is very much yet still in the stage of infancy. It's not revenue generating yet, but they hope to and have said that they will apparently generate revenue by Q1 of 2023. So I think we just need to wait and watch. Now, I want to show you how the tides of the short interest have been changing. As you can see, the short interest in Muln is down from its peak near 45%, but the institutional ownership is on the rise. Short interest is down nearly 11%, which could be a great thing, and it has improved from a month-to-month basis. And also good news is that institutions are also buying. BlackRock did up their stake in Muln Automotive. So these institutions generally have done a lot of financial research on companies and really done their due diligence. So it can be reassuring when we see major financial institutions buying penny stocks like Muln Automotive. And as you can see, they have added nearly $7 million worth of shares in Q4 to date. The majority of Muln shares are owned by BNY Mellon, State Street, BlackRock, Vanguard, and Two Sigma Investments. So these are some of the most reputable funds out there that are investing in Muln Automotive. Also, some good news since my last video is that Muln Automotive's share has increased from 19 cents to 24 cents today. But the TipRank Smart Score has said it's a 1 in that it is most likely to underperform the market. This did actually go up to 3, but now it's been downgraded even more. And in some great news, Muln has signed their first US dealer partner, and this is with Randy Marion Automotive Group. And of course, they've done this in light with the company launches that we're expecting in 2023. But even though this is good news, there are still problems with Muln's financials. In fact, Muln's cash and cash equivalents are not actually enough against their current cash burn from operations, which means they're of course loss-making even from a cash flow perspective. And then on top of that, the company does not have liquidity required to start the production and deliveries of its flagship SUV, which can be problematic, and it's one of the vehicles that people are most excited about. And I've also mentioned this in my previous video, but their recent acquisitions have meant that they've had to spend a lot of capital. Now, this is of course a cash burn in the short to medium term, but this may pay off in the longer term. But I guess everyone who is here on this video is probably most interested in seeing how Muln performs in the long term. I mean, generally speaking, penny stocks are highly volatile, and only if there is a chance that they will deliver big upside, then it's only then that you're willing to take the risk of a penny stock. Now, if you want some more price update videos and some more price analysis, check out some of my older videos from the last few days. or hit that bell notification and subscribe, as I will be posting regular Muln automotive updates, as it's a very interesting penny stock to watch out for, and I really hope it does do well in the future. But again, no one can know for sure. We just have to monitor the performance right now, see how they do in 2023 with their new production, and see if they're able to generate revenue so that they can start making a return on all these investments they've made in these acquisitions. Anyway, guys, it's a short, quick video. I just wanted to discuss the reverse stock split and how it will impact investors. If you want me to go into exact details of the reverse stock split, I will be posting that in the next video. But I didn't want to keep this video too long. But if you do want to know more about a reverse stock split, I've linked some websites in the description box that will explain the economics behind them and how it impacts not just the company, but also investors. So I would highly recommend that you check those out. Anyway, guys, if you enjoyed this video, remember, hit that like button and that subscribe button and that bell notification. And I will see you guys in the next video. And also remember, none of this is financial advice. I'm not a financial advisor. Make sure you do your own research before you invest in anything, as capital can always be at risk. I'll see you guys in the next video. Bye.